Hi, guys. We are here with Ricky Ortiz. Did I pronounce it well?
Yeah.
Nice. Investment advisor, past series 6, 63, 26, and 65. I'm pretty much a genius.
Not a word.
Oh my gosh, I bet. $5 million in AUM, life licensed in Arizona, Nevada, California, what else? Texas and Utah. A lot of work.
Good start.
My, tell us a little bit about yourself.
Yeah. So I've been in the financial services industry for 16 years. I've been securities licensed for 13 years.
Okay.
And before that, I was in the medical field for 10 years, 5 years as an EMT and 5 years as a registered nurse. And how I ended up in financial services is because as soon as I graduated from nursing school, one of the things I realized is that up until that point, I had made all the worst bad decisions with my money. So I was really struggling financially. And so I knew that I was going to be making more money once I graduated from nursing school. And unless I educated myself and learned some financial literacy, I knew that I was going to start struggling again. And the other thing too is I always had a big issue trusting people with my money. So then I asked myself, like, why don't I get all the licenses? Why don't I, get licensed in insurance and investments? And so instead of paying somebody to manage my money, why don't I manage my own money? And from there, I just started helping, friends, family, coworkers. And one of the things I realized right away is there's a major financial literacy problem going on with people really don't know what to do with their money. And as I started to help people get on a better path, eventually I just became more passionate about helping people with their finances instead of with their health problems. And I made a full-time transition. And now this is pretty much all I do.
But EMT though,
Yeah.
that's, wow. So you think that was still a better trade?
Yeah, I do enjoy it. I enjoy it a lot more. I feel like I'm able to make a bigger impact for people. And so, yeah, I love it.
What was one of those cases, like say a really sad case that you feel like that impacted you? And I'm going off the script.
As far as like in the hospital?
No, as far as in like the finance world, anything like a story that.
Yes, there is one that I just thought it was insane. And I had met with a client, husband and wife.
Mm-hmm.
They had been paying into a whole life policy for 6 years, and they're paying $900 each. So that's $1,800 a month. And when I sat down with them, first thing we did is we took out a calculator just to see, okay, if you had gone a different route 6 years ago, where would you be today?
Okay.
And we were able to determine that if they had applied for a term insurance policy for the same coverage, instead of $1,800 a month, they would have been paying like $300 and something. And all that extra money, if they had even just put it in a shoebox under the bed somewhere, they would have ended up with $106,000. Yet after 6 years, when they actually decided to take all their money out, all they got was $60,000. So not only a 0%, not even a 0% return, they actually lost $46,000 by putting their money in a whole life policy.
Yeah, and unfortunately, I have some bad stories too. Yeah, that's unfortunate.
Mm-hmm.
So that's what motivates you to help people with.
Yes.
So let's start with the big one. What exactly is cash value life insurance? And
cash
why
value,
do you call it? I know you call it a trap. I noticed.
Yes.
Yeah.
It's because cash value life insurance is basically life insurance, and it has a savings component, and it's bundled into one, which sounds great. But the reason why I call it a trap is because you're paying for two things, but essentially you're only getting one. Because, for example, let's just say you like that couple I mentioned, right? As soon as they decide to take out all their cash value, well, guess what? Now they lose their coverage. In most cases, if the person dies, yeah, the company obviously is going to pay the death claim, but in most cases, the company actually ends up keeping the savings. And so when you compare that to other options, for example, buying term and investing your money somewhere else where you don't have to bundle them, you have more flexibility. And not only that, you're able to put a beneficiary on the money that's supposed to be in the savings so that if something happens to you, now your family will get two versus one or the other.
Yeah. And a lot of agents say cash value builds wealth. How is that true? And first, is it true?
Yeah, well, technically, yes.
Okay.
But in all the years I've been doing this, primarily because I work with middle income families, I've never seen a single scenario where they actually made significant gains from investing in a cash value policy. Not compared to, like, for example, in investments. In the time I've been helping people with their investments, I already have 3 clients that have surpassed $500,000 in their investments. Whereas if they had left their money behind in a cash value policy, there is just no way. Like, we've actually crunched the numbers, and if they would have stayed where they were at, they would have never grown that much money. So there's definitely better vehicles out there for building wealth. And to me, honestly, cash value, just compared to other options, for me, it just doesn't make a whole lot of sense.
If I were, say, you're the agent, try to convince me to get life insurance.
Okay.
Say I didn't have.
Oh, if you don't have anything. Okay, well, the number one reason for life insurance is for income protection. And
I do, but we'll do an exercise.
Okay. So I would ask you if you have kids. Do you have people that depend on your income?
No.
If anything were to happen to you, is anybody going to be affected financially?
Not.
And you probably wouldn't. Would you want to leave money behind for anybody?
Definitely, yes. I don't want
Who would that be?
Well, I would like my husband, my mom, my sisters, my adopted sister too.
Okay. And
There's nephews.
so you have a good idea of, like, how much money you would want to leave them?
I would do it equally. Dang. I
Yeah,
hope they won't hear this. Be like, wow.
Yeah, and so most of the time people get it for income protection, but for people that want to leave money behind, I mean, the best way to do that is with term insurance, you're able to get the highest amount of coverage for the least amount of money, because you don't want to pay a whole lot of money for it, because that's going to free up more money for investing. And the goal is that by the time you reach the end of term, you should have surpassed the amount of in your term policy, but now in your investments. So that way you don't have to keep paying for life insurance forever. Once you have that money accumulated in your investments, now you can cancel your life insurance if you wanted to, or once it reaches the end of term, you might not have to renew it. But at least now, instead of paying for life insurance, now you have this money in an investment where you can also put beneficiaries, and where the money will continue to grow even if you stop putting money into it.
And that's why I trust you, Ricky. That's why I would. If I didn't have, I would have signed.
Nice.
Yeah. Because it's that you're not a salesy. It's about that care.
Yeah, and I think it's the nurse in me.
I can tell you. Yeah.
The nursing process is very similar. You assess your patient, you ask questions, you find out where they're trying to improve, what problems they currently have, and then
exactly
find a solution. And at that point, you pretty much just show them their options. And 9 out of 10 times, they're obviously going to end up choosing the option that's going to be in their best interest.
Right. Which is, yeah. What does the cash value agent not want people to know?
Primarily all the hidden fees. In all the years I've been doing this, I have not sat down with a single client where I ask them, are you aware of how much of your money is going to fees? They have no clue. And there's different things. One of the main ones is one of the reasons with cash value where your savings doesn't accumulate right away, and sometimes it takes several years, is because there's massive upfront commissions paid to the agent that sells it to you. And typically the agent will get anywhere from 70% to 120% of the first year's premium. So if you're paying $500 for a policy, that's someone's getting $4,000 to $6,000 of your money as a commission. The other thing too is, if you ever need your money, you have to take it out. Unless you want to surrender the policy and just take out all of it, which you'll lose your coverage. But if you just want to use the money for something, you have to take it as a loan. And so clients a lot of times are not aware that as soon as they take that money out, they're going to have to pay 6 to 8% interest to borrow their own money. And, they're not obligated to pay it back. but then if they pass away, they're going to subtract it from their death benefit. And if you think about it, if you went to the bank and opened a savings account, and when you went later on to take out your money, if they told you, okay, we're going to give you this as a loan, and we're going to charge you interest, I mean, wouldn't that be totally crazy?
Right.
Right. Yet cash value works exactly the same way. And then there's also surrender charges. The average client will actually cancel their policy within 7 to 10 years, and they get hit with massive surrender charges. So most of the time, if they surrender their policy that soon, they either barely break even, but in most cases, they actually end up taking out less than they ever paid into that.
I wonder why, like Rothschilds and Rothschild in America, but why they actually use it? All these people, I wonder why they use whole life.
Well,
Well,
maybe
the Rockefellers and
yeah, and I've heard of things like infinite banking and be your own bank, and apparently there's like people that have actually written books on that, and there may be certain loopholes that may work for high net worth individuals, but like I said, I just never seen an example, and every time I talk to an agent that sells that type of insurance, I always ask, like, sit down with me and show me exactly how that benefits the client, and all these years, nobody's been able to explain that to me.
probably, yeah, it has to be a specific kind of client. But
Yeah, but on the downside, this is being sold to middle income families where it probably doesn't make a whole lot of sense for them compared to other options.
Yeah, no, I agree. If cash value is such a bad deal, why is it still being sold so aggressively?
Well, Kat, that one's very simple. And unfortunately, at the end of the day, for a lot of people, it's all about the money. See, as a cash value agent, if I put you in a whole life policy, like I said, I might make 4,000 to 6,000 on commissions for selling that to you. So, but if I turn around and offer you a term insurance, I'm going to make 10 times less money. So if you think about it, from the agent's standpoint, if they really want to make the most possible amount of money that they could make, why would they put you in a term insurance policy when they can put you in a cash value policy and make 10 times more commission? Right. But the problem is, they never really show the real cost of locking your money into a cash value policy. They don't show you other options, other alternatives. The cost opportunity of locking your money into a cash value policy when you can be doing 5 to 10 times better by putting that money in an actual investment.
Yeah.
So for example, let's just say you get a whole life policy, you're paying or even an index universal life, any of those. Say you're paying, $500 a month. Well, for $50, you can get a 30-year term for the same coverage. And that $450, if you put it in an actual investment, averaging 10% rate of return, then after those 30 years, that would grow to about $1 million. Now, granted, investments are not guaranteed. And just because an investment has paid 10% in the past, it doesn't mean that it's going to continue to pay 10% in the future.
Sure.
But at least if you look at it from a historical perspective, there's tons and tons of investments that have averaged 10% and sometimes even higher over the last, 30 plus years. And so at least by putting your money in a different vehicle, at least you have a shot of building more wealth, pretty much.
What are your thoughts on real estate?
Real estate is not my specialty. It is something that any type of investment I think would be good. The more you diversify your money. I primarily work with mutual funds, managed accounts. But yeah, anything that you can build equity over time is, and where they're not, you're not gonna have to like lose a lot of money to fees, it would be a great way.
Okay. What about like gold and all these?
Yeah, I mean, you can put some money and stuff like that, as long as you're diversifying. Crypto's not something that actually the company that I'm with is working on maybe adding that to our platform as far as like products that we can offer our clients. So yeah, there's many things, new products coming out, as things change and technology evolves, there might be better products. But yeah, anything that's gonna give you an opportunity to, grow your money over time, where the fees aren't so high, is always a good way to go. Where you're
Yeah.
diversified, and more importantly, it's always good to put your money in investments that are actually diversified and professionally managed, because then someone's going to be keeping an eye on that investment and making sure that it's doing what it's supposed to do, versus if you just go and
Hmm.
put your money in random places and nobody's really keeping an eye on it.
Yeah. Yeah, that's true. And could a person that say somebody doesn't really know anything about money, but they do have some type of maybe TSP or 401k, can they use that to invest in real estate? Or say they choose, I don't know, some type of something else. Can they use that money and
From
just
a
to diversify?
from a 401k, well, if they're working with a company where they have that, they can't touch the money until they leave that employer.
You gotta,
And then they can either
right.
do a rollover, which is the probably the best option, because it's not going to count as a distribution,
Mm-hmm.
meaning they're not going to hit you with penalties and or taxes.
Right.
If you pull the money out to put it into real estate, well, it's going to count as a distribution, which means that they're going to hit you with a 10% penalty, and then now you're going to have to pay tax on that money. So it's always good to analyze all your different options,
What works
crunch the
best.
numbers, and the math, numbers don't lie. So that's always usually my approach. Is I just take out a calculator, a sheet of paper, I crunch down the numbers, and I just show the client, like, this is the math. And obviously,
How much you lose here, how much you
mm-hmm.
make here, how much, yeah,
And
what
then
makes most
that's how
sense.
you're able to make a decision.
Mm. So, what are the hidden costs of cash value life insurance? Back to the life insurance, so we can.
Yeah, the hidden cost would be pretty much the commissions that get paid to the agent, which clients are not aware of. The surrender charges, the interest that they have to pay to take out their money, and then there's administrative fees. And like a huge chunk of money that goes towards fees.
Interesting that they're not aware and they're not being
No,
presented upfront with.
no. I analyze policies on a regular basis. In fact, right now
Interesting.
I'm working with a client that had me analyze her policy. It's a small policy, but she's paying $50 a month. The cost of insurance, according to the policy, is like $9 a month, but the fees is like $37. She's been putting money into this since 2020, so like 3 years. Her cash value is like $19. And I was showing her, and she has 100,000 in coverage. If she could have gotten 150,000 in coverage for like $30, and if she had invested that difference today, she'd have $1,000 instead of,
Oh, wow.
yeah,
So that's why you need a professional.
absolutely.
So, what's a better strategy than cash value life insurance? We're
Well,
going to exhaust this
there's
topic because a lot of people are,
yes,
they're
yes.
not aware.
Well, there's actually a strategy that's been around for decades, and it's called buy term and invest the difference. And pretty much means you get the highest possible of coverage that you can get for the least amount of money with the term insurance policy. And just like what I was mentioning, instead of paying $500 for a policy, you can get a term insurance policy for probably sometimes 70 to 90% less. And all that money that's mostly going to fees, you can then take that money and put it in an investment. The other thing too is with indexed universal life insurance or any type of universal life insurance, one of the things is that the cost of the actual insurance goes up every year as the person gets older. But most people that are paying into an indexed universal life insurance, they have no idea that that's really what's happening. In fact, when you ask people, did you know that the cost of your insurance is going up every year? And they're like, well, no, because my payment's always the same. But what they don't know is because since they're structured in such a way that the client has no way of knowing like what's going to fees, what's going to savings, what's going to insurance, and their payment's always the same. But what happens is every year that they turn 1 year older, more money goes to the cost of insurance and less money goes to their investment. And again, that's one thing that every time I sit with a client that has it, they have no clue that that's what's going on.
Wow.
And so there's just multiple hidden fees. And the thing with that is, if you really think about it, I mean, shouldn't clients have the opportunity to not just be given one option, but maybe look at annuities, look at mutual funds, managed accounts? Because all financial products have advantages and disadvantages, right? But you can't make an informed decision unless you're aware of those. And I think it's unfair to the consumer that they're put in a product where they have no clue how it works, and they're also not aware of other options. That makes sense. So that's one of the things that I do bring up to their attention, and I do go over all kinds of different options and pretty much let them decide. I mean, people have common sense, and if you give them the right information, now they're able to make an informed decision on their own.
Yeah, which is very nice of you to educate. And
Yes.
yeah. Why do so many smart people fall for cash value policies?
Yeah, and that's huge because you got nurses. When I worked in the hospital, you would think that because they're highly educated, right, that they would know what to do with their money. But unfortunately, those type of products like cash value life insurance is sold emotionally, not logically. They don't take out a calculator and crunch the numbers, and so then they talk about leaving a legacy, security. Don't put your money in the stock market because you're gonna lose everything. And then they have this thing like infinite banking and be your own bank. And unfortunately, people they listen to the messenger instead of the math. And because they make them sound really, really good, it's actually very, very common that people that are very, very highly intelligent, great careers, making good money, making some of the worst decisions with their money.
Right, and I admit I was actually pretty intrigued by that being your own bank part of that. I was like, that's pretty cool concept until I realized it's not. No, there are a lot of flaws to that.
Yes.
And I guess your why was that the lack of trust. Is this why you chose this other path, this other route?
Well, once I realized the impact that I was able to make in other people's lives and seeing people that they've been paying into these policies for many, many years, and all of a sudden they're wondering like, how come their money's shrinking, or what's going on with my policy, or how come I called the company to ask for money and they want to give it to me in the form of a loan. And as I started analyzing people's policies, one of the things that I started doing is going over the client's policy page by page. And I would always ask them, did your agent that sold this to you go over it page by page before you accepted it? They're like, no, they never did that.
Oh, wow.
So as I would, break apart their policies and really go page by page and show them all the pitfalls that are actually written in the contract, so that they wouldn't think that I'm actually making this stuff up, but actually show them that it's actually written in their policy. Not a single one of those clients ever really knew what they bought or how it worked. So for me, at that point, I just felt like it was a moral obligation to make it my life's work to help people with their finances, because statistically, the majority of people are going to make, they're not going to be able to retire because nobody ever sat down with them in their working years to put together a plan. And so unfortunately, I see it all the time where I meet with a client that's like 60, 65, and all of a sudden they realize that their $9,000 that they accumulated over the last 40, 50 years is probably not going to take them very far. So people will literally work until the day they die.
Yeah, that's that rat race. And I don't know if we're even going to have the Social Security number.
That might not even be around by when we
option.
retire.
Yeah.
Yes.
So, but on a positive note, let's play a game.
All right.
You ready?
Sure.
It's a yes and no game.
All right.
Is it true that many modern life insurance policies allow you to access a portion of your death benefit while you're still alive if you're diagnosed with a chronic, critical, or terminal illness?
Yes. And it could be a great option. For example, the terminal illness benefit. It would allow you to have access to your money that they're supposed to give you until you die, right? But if you have a terminal illness rider, what that's going to allow you to do is, if you ever get cancer and you're obviously so sick that you can't work anymore, and so now you have no income, it's going to allow you to get a portion of your money while you're still alive. And sometimes you can get anywhere from 40 to 70% of the amount of money in your death benefit, where they will accelerate that benefit to you and give you that money up front, so that now you have at least some money to take care of yourself. So it could be definitely, it's a great option. Now, as far as like living benefits for like, chronic illnesses, or critical illness. Well, the disadvantage of those is that they're also going to take it from your death benefit. And if the intention, the real purpose of insurance is to replace your income or leave money behind for your loved ones, if you ever have to exercise that living benefit, well, guess what? They're going to decimate your death benefit, and eventually you're not going to leave a whole lot to your family. So I would say if it's really something important, that there's standalone policies that are very inexpensive where they'll actually cover for those things. They'll pay for, terminal illness or critical or chronic illnesses, and they will actually pay for those things where you don't have to have it taken from your death benefit. So you can actually have separate policies and each intended for its own purpose.
Which is, well, that would be a no-brainer.
Yeah.
In this day and age, after the pandemic.
Yeah, definitely.
Because you were an EMT,
Yes.
Is it true that permanent life insurance policies can accumulate cash value on a tax-deferred basis, which you can borrow against or withdraw for any purpose?
Yes, and that's actually true, and you are able to do that. Now, another way you're able to do that is by putting money in a Roth IRA, which is also tax-deferred. The great thing about a Roth IRA is once you've been putting money in there for 5 years, all of the money that came out of your pocket you can actually take it out penalty-free and tax-free. Anything above what you put in, like the gains, is what you're not able to access until you're age 59 and a half. But that's a way of accumulating tax-deferred growth. And the great thing too is that if you ever need that money, they're not going to give it to you in the form of a loan. So you're not going to have to pay interest on that. And so it gives you more flexibility. So definitely there's different ways you can do that. And it's always good to look at all your different options to see which one makes more sense.
A lot of people don't know that.
Right.
So I'm glad you elaborate on it. Is it true that some policies allow you to make a one-time lump sum payment instead of going premiums, providing immediate coverage and cash value growth?
Yes. And one example of something like that is called a single premium whole life policy. Because a whole life policy is designed for you to pay for it for your whole life until age 100 when it reaches maturity. Well, if you do a single premium whole life policy, that's going to allow you to make a lump sum payment into that whole life, and you don't have to keep making payments after that. But if you do need money, you're going to be able to access it. The downside of that is that in a whole life policy, the net return after fees is only 2 to 3%.
Yeah, that's a big downside.
And so if you're going to put a lump sum of money, why not, again, term insurance for the least amount of money? If you put that lump sum in an actual investment, there's something called the rule of 72, which means if you divide the interest rate, for example, in a mutual fund earning, 9% rate of return, you divide 9 into the number of 72, which is 8, which means that lump sum of money is going to double every 8 years. At 2%, it's going to take 35 years for that same money to double. So again, the math numbers don't lie, and if you're going to be able to double your money every 8 years versus every 35 years, why would you want to put it all in a single premium whole life policy when you have better options?
The math and mathing.
That's it.
Yeah. Huh. Is it true that life insurance can be used to pay estate taxes, equalize inheritances among heirs, or fund trusts for special needs dependents? Everybody with some strong accent over here. Did that make sense? Or do I need to read it again?
Yeah, no, that's perfect.
Okay, good.
Yeah, you're definitely able to do that. And I'm sorry. What was the question again?
I know, right? Is it true that life insurance can be used to pay estate taxes?
Yes, estate taxes.
Yes, equalize inheritances among heirs, or fund trusts for special needs dependents.
You're able to do that, but the answer is that you can do that with any life insurance. So I have seen agents that promote cash value life insurance as the vehicle to do those things you just mentioned. But you can do the same thing with a term insurance policy for a lot cheaper. The other thing too is, if you put your money in an investment, you can also, like I mentioned before, you can put beneficiaries to that investment so that it's able to, so you can do that with any type of insurance product, and you can look at different options. But yeah, that's something that you can definitely do.
Is it true that life insurance can protect a business by funding buy sell agreements,
Yes.
covering key employees, or providing collateral for business loans?
Yes. And those are major uses of life insurance for businesses, which are amazing and very important. And people that have a business should definitely have those things in place. But again, you can use any type of life insurance to do that. And the most affordable way to do that is always going to be term insurance. You know, anytime you go into cash value, you're getting yourself into a vehicle where the returns are bad, the fees are high, and compared to other products, it might not be in your best interest. But again, it's always better to look at different options. But yeah, key employees is very important, because if you have a key employee running your business and that person passes away, obviously that's going to affect you financially. Buy sell agreements, if you don't have a life insurance in place and something happens to you, and now your partner's half of the business ends up, passing on to their family, and they might not care for it,
Right.
well, that might be an issue as well. So there's definitely some very important reasons to get life insurance for business uses.
Mm-hmm. I'm with you on that. Is it true that some policies offer significant coverage amounts
Mhm.
with no medical exam
Yes.
based on answers to health questions and data checks?
Yes, those are non-medical life insurance policies, and they may make sense for some people because you're not required to do a blood test, and you're just pretty much answering medical questions. And then they're going to look at your medical records or medical history, and if everything's clean, well, then you're going to get approved, right? So if you're really afraid of needles and having them draw your blood, maybe that would make sense. But for people, specifically people that are fit, they're in great shape, they take good care of themselves,
Younger.
they eat healthy. If they just go and apply for, instead of doing the non-medical, do the one that is going to require a blood test, you can actually get a preferred rate, and which means you're going to pay significantly less for the same amount of coverage. And so for some people it may make sense, for some people not. But yeah, non-medicals definitely, also for older people people that want to get a policy for their parents, where maybe it's going to be too expensive for them. If they do a non-medical one, because it's usually for a smaller policy where it's just going to cover for funeral costs and stuff like that. So then that it may make sense at that point too, for something like that.
Mm. Is it true that certain whole life policies may be dividends, which can be used to increase coverage, reduce premiums, or be taken as cash? And I know already the answer.
Well, the crazy thing about dividends, see, when it comes to an investment, dividends are good because they're giving you like a bonus. When it comes to like a cash value policy that pays dividends, it's very misleading because people think that they're actually getting something.
Mm.
A dividend, all it is a return of excess premium. All it means is they overcharged you, just like the IRS will overcharge you, and then you get a tax refund, right? So same thing with dividends in a cash value life insurance. They overcharge you during the year, then they realize that they don't need that money anymore, so they turn around and give it back to you. So that's why it's tax free. And yes, you're able to do multiple things with that dividend, like increasing your coverage and paid up additions and different things like that. But if you had invested somewhere else,
Right, that's
you
where we
could
go
take
back
that
to.
money and pay for those things that way, and that rather than just getting a dividend, you probably have a lot more than that because you wouldn't be paying so much in fees.
Mm. I had to keep you up on your toes. Is it true that you can name a charity as a beneficiary or use the insurance to create a lasting legacy for causes you care about?
Yes, definitely. And the good thing with life insurance, when it comes to listing a beneficiary, you can put whoever you want. So charity, anything, whoever you want to give your money to, once you pass away, you can definitely do that. And if it's important for people to do that, then why not?
Didn't Karl Lagerfeld left his money to his cat?
Oh man,
But then it's Karl Lagerfeld. What do you expect?
yeah, it's all kinds of goofy stuff
Yeah.
people do. Well, you can
Yes.
definitely, as far as like leaving it to a nonprofit or something like that, or for charity, yeah, definitely.
Yeah. And let's play another game.
All right.
Would you rather? Would you rather have a policy that builds cash value over time or one that offers the highest possible death benefit for your loved ones?
Yes, I would prefer the highest possible death benefit for my loved ones.
Oh, of course.
And because in reality, life insurance is not for you, it's for the people you care about. You know, look at what happens with when people don't have it and they're like doing like a GoFundMe to get the money, but the GoFundMe is not going to bring your paycheck to your kids. So I would definitely do that. And if I want to have a savings component, then why not unbundle them so that you're getting better returns potentially? And at the same time, if something happens to you, maybe your family can get not only the money in your policy, but your savings as well.
Mm. Yes. What a nice answer. Would you rather pay a single lump sum for lifetime coverage or make smaller monthly payments over many years?
Yes, definitely smaller payments over many years because of the cost opportunity of locking your money into a one lump sum payment into something with
Yeah.
low returns when you can take that money and redirect
Invest
it in better performing vehicles or investments.
the cash flow a little more. Yeah. Would you rather have a policy that can help cover your expenses if you become critically ill, or one that focuses solely on providing for your family after you're gone?
Definitely providing for my family after I'm gone. But again, if living benefits are important, then why not get a standalone policy on the side that can also take care of that? So you don't have to choose between one or the other,
That's a hell of a blessed family.
right?
I never asked you. You have a family?
No, I don't have any kids.
Not
No,
yet.
no.
Okay.
Just like, my blood family, like my mom, my
Course, but
sisters.
still nice.
But
Wow.
I would like to leave money for them. I know my mom, if something happens to me, the house she lives in, she'll probably lose it because I pay a huge portion of that mortgage. So definitely I need to have life insurance to make sure if something happens to me, my mom's able to take that money and pay off the house, and then she doesn't have to worry about it.
Oh yeah, you need that ASAP. Although I don't really like how we have so many death questions. What's up with that? My goodness. Would you rather have a guaranteed inheritance? My gosh, let me skip this one.
All right,
This is it's getting dark. Um, maybe. Would you rather have a policy that requires a medical exam but offers lower premiums, or skip the exam and pay a bit more for convenience?
Yeah, I mean, if I feel like if it's gonna be cheaper to just get the medical exam, why not?
Right?
Sometimes there's people that already have pre-existing conditions. They already know that their blood's gonna be all jacked up, and they're worried that if they draw their blood, because they know that they were like pre-diabetic maybe 5 years ago, and they haven't taken care of themselves, they haven't gone to the doctor, then they are concerned that if they draw their blood, that they're gonna find something wrong. So in those cases, I mean, it would be a good idea for them to know that there's at least an option to try to do a non-medical plan so that they don't necessarily have to do a blood test. And in a lot of cases, it is a little bit more expensive, but it's easier to qualify.
Uh-huh. Yeah, of course. Would you rather have a policy that you can adjust as your needs change, or one that stays the same for your entire life?
Well, your needs do change over time. The older you get, the less you need life insurance, assuming that you're doing the right thing with your money, and because you should be investing for retirement. You should be investing for short-term purchases. Like if you need to buy a car, you should be able to purchase that cash instead of having to finance it. So if you pre-plan your investments ahead of time, and there's something we call the three fundamental accounts, which is your emergency fund, your short-term investment, and your retirement plan. So once you have all those things taken care of, then as you get older, eventually you're not going to need any life insurance because at some point your house is going to be paid off. Your kids are going to be grown and out of the house, independent, making their own money. And so if you have money in your investments and something happens to you and you're leaving a house that's paid off and your kids are independent, is anybody really going to suffer financially? So then you're not going to need to keep paying for something for your whole life. If you do it right, if you put together a plan and actually follow it, your needs will change as you get older. And the truth
Right.
is that the older you get, the less you're going to need life insurance.
Would you rather use life insurance as a way to support a favorite charity or to help equalize inheritances among your, well, you don't have children, so your loved ones?
I mean, for people that, if it's important for them to be able to do that, as far as like, distributing the inheritance and all that, definitely you can do that. But if it's also important to do it for charity, I mean, you could do both. Just depends, which one is, if you want to choose between one or the other. I think
What about you?
it's going to depend. As far as for me specifically,
Mhm.
well, I I think if I wanted to really leave money for charity, I'd rather not donate any money throughout my whole life
Mhm.
and just invest it, let that pile up, so that by the time I die, I can leave a bigger chunk of money to, and in fact, that is something that I do plan to do. Um,
Same.
Distribute a lot of my money to charity, but in the meantime, at least it's earning interest, and then by doing that, I'm able to make a bigger contribution versus if I just give it
Right.
away right now.
Which charity would you donate it to?
There's different ones actually. I was a member of the Lions Club. I think Lions Club International. It's an international charity. That's definitely one I would leave money for. Also, I have friends that are in different types of nonprofit organizations. Anything benefiting veterans, anything that has to do with health, educating people, financial awareness. I'm all
It's
about giving. So even now, people that sometimes ask for small donations or whatever, I mean, anything I can give now, for sure. But at some point, I would like to make a bigger impact and leave like a larger amount of money, because definitely there's a lot of things that they say money is the root of all evil, but in reality, it's like when all these charities are trying to do great things, they need money,
right.
right? And the more money that they're able to receive, the more that value that they can add to others. And ultimately, someone, a human being, is going to be at the end accepting that benefit, taking advantage of that money that was donated. So
Would you rather own a policy that's easy to manage on your own or work closely with an advisor to customize your coverage?
I would say, as much as you can manage on your own, especially if you're choosing a product that's not overly complex,
Mhm.
you should be able to make your own decisions for the most part. Now, once you're getting into investments, I would definitely work with a licensed fiduciary that's legally obligated to do the right thing for you. Because when it comes to investments, a lot of all these professionally managed diversified investments, you look at the people that are managing the portfolio, and you got a team of investment professionals with anywhere from like 10 to 40 years of experience managing your money. So for things like that, definitely work with a professional. But if when it comes to protecting your family, term insurance is so easy to understand, that you shouldn't need somebody to guide you through that process. It's just a quick quote. Choose the one that makes more sense to you, and you really don't need to have somebody constantly, looking that over for you, unless you maybe something changes and you need more coverage. But yeah, you shouldn't have to have your life insurance in something that's like very, very complicated, where you're gonna need somebody to be there for you, because unfortunately, not all agents have your best interest at heart, and if they're more interested in a bigger commission than doing the right thing for you, then unfortunately you end up being misguided.
Life insurance or Bitcoin? $50. Say roughly $50 a month. Where should I put it?
If the money is gonna be for you, maybe Bitcoin. If it's gonna be for your family, you know that life insurance is considered what's called an aleatory contract. What that means is that you're exchanging on equal values. Because with the life insurance policy, if you're young and healthy, you can get 300,000 to 400,000 or up to 500,000 for sometimes just $50 a month. And if you do the math, the company is always going to pay significantly more money than you ever paid into it. In fact, there's been cases of people where they apply for life insurance where they literally just barely made their first payment of $50, and then a week later they die, Well, the company's still supposed to continue the underwriting process. And if they determine that that person was actually insurable and that they would have approved that person, then they'll actually go ahead and pay that 300, 400, half a million. And the client only paid $50.
Bang.
So if it's for your family, Bitcoin's not going to be able to do that for you, especially if the value drops. A life insurance policy is guaranteed to pay that higher amount, which is always going to be significantly more than you ever paid into that policy.
Especially if you have a family. You're kind of like, come on now.
Yeah.
How trifling would it be? I'm gone and they're out here trying to pay for my funeral, stressing. Yeah. You gave all the wisdom today. You were the one with all the licenses and 5 million and all this. So, yeah, I am impressed. And if you guys are looking for somebody, Ricky.
Yes, I'm licensed in Nevada. To answer your question earlier, if this is all I came for, I had actually forgot. I was so focused on this. But tomorrow I actually am going to be seeing some clients out here, and I think I'm going to come back.
Oh, that would be nice. Thank you, Ricky.
Thank you.
Thank you so much.